He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
All right, we're back. Angry Mortgage is on the air.
We're back. Happy New Year.
Happy New Year. Yeah, I mean, like, this is like the second week after the New Year's. But it's not like I have a pet peeve of mine. Like, I'm wondering why the fuck so many people were off last week. Like, I understand people not working between Christmas and New Year's. No problem. I'm okay with all that. I get it. But you had to work. You worked. Okay?
Yeah.
I came in once at least, right? Between Christmas and New Year's. But this thing about why in the hell is this an extra holiday week? This between New Year's until, I don't know, the next week. Like,
I think kids go back to school Monday. So maybe a lot of parents were like, oh, let's just spend another week with our, lovely children.
Oh my God. I'll tell you what, this Canada is one country that is really, really fucking fond of days off. Okay. I mean, like, or am I just a bitter old bastard who, because I'm working, everybody else has to, right?
Well, I think it's like the generational difference, right? Like, I would love a week off every month, right? Obviously. But, or maybe every 2 months.
My heart just stopped for a second there.
Ideally, in my perfect world, a little mental health break would be lovely.
Like, honestly, like, I felt that I needed defibrillation for a couple of seconds there. Like, I mean, wow. Oh, yeah, right. We're different. We are different.
Yeah. We also don't stick to jobs for the next 20 years of our lives, right?
Yeah. Well, I've had a few jobs, but I've been with this one for a long time. Like,
versus like, I know a lot of people my age are like, every couple of years they're like, I'm bored, I'm going to switch.
I think it's 29 years for me in mortgage brokerage.
Is it?
Like in the summer or something. I think that's probably it.
When you hit 30, we're going to have a party?
Fuck no. I'm trying to have less parties than my life. That's for goddamn sure. All right.
I tried.
Yeah, Jesus. Anyway, we got an action-packed full show today. So we're going to dive in. And also I get some comments like, why don't you quit your bullshit and just talk about the stuff that's important? So, because you know what? In social media, everything is based on cruelty.
Basically, it's dog-eat-dog world out there.
All cruelty all the time. All right, so I had a monster post on X. Like, I'm still call it Twitter sometimes, but I've got to call it X because
Twitter flows nicer though.
I think it was still a great. I actually know now why he changed it.
Yeah.
Okay, because I'm just finishing reading this huge 900 page, at least it seems like it, this huge book on Elon Musk. I'm just finished reading it now.
Nice.
And he dreamed of calling a sort of a social media company X 25 years ago. So when he finally overpaid for one, he decided, well, fuck it, I'm going to call it X.
Yeah.
I like Twitter. I think it's still pretty good.
Yeah.
I think the word is still pretty good. The name is still pretty good.
Tweets, Twitter
It
fingers.
all seemed to make sense, right? But anyway, just coming off a monster post on X/Twitter, or sometimes people call it, they put the X in front of the Twitter and call it
X-Twitter?
Well, they call it actually Sitter, like, or Xer, or
oh my God.
Yeah, no. Anyway, big post, and the post was, and it actually surprised me the kind of reaction it got, because it was like huge, like 1,500 likes. I mean, it was just like huge thing. And what it was all about was, are young people, and you're the ideal person to talk to about this, are young people giving up on Canada and leaving?
Yes.
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 Okay. I know. And, we got there were so many comments. Oh my God, there were so many comments on that post. But it started with me talking to a young woman earlier this week. Last week. And we're just talking about, because she was doing some other work for some other media outlets, and we just started talking about mortgage and stuff. And she says, I don't understand how I'll ever own a home. Like, I'm in my 20s now. the rent. She doesn't even live in the GTA. Okay, so which is like crazy expensive. So is Vancouver. But she said, I'll never own a home. So I commented, well, like sometimes people can get help from their parents. She says, no, my parents were renters their whole lives. So I'm never going to get any help. And I don't. She's working at a decent job too. She's well educated, working at a decent job. And it just hit me like a brick. I mean, like, this is a real thing.
It is.
And I asked, I said, do you know, do people leave Canada? Do people in your age bracket leave Canada? And she says, yeah, I know 2 couples who left Canada. One went to, I guess it must have been, she said South America, so I'm guessing probably Brazil, because nobody goes to Argentina, and Latin America. Okay, so that's really fucking awful, right?
Yeah.
I mean, that generationally people would say, I give up on Canada.
Yeah.
I mean,
no, like if I could work from home, I would be back home in my parents' home country, and I would be living my life out there, living my best life, and working, gaining Canadian money and living good. Like, why would I want to suffer here? Like, as much as I say that I would want to move to Alberta because the home prices and everything, like, yeah,
much less.
It's much less. But it's like, if I were given the option of Latin America or Alberta, I'm going to go to Latin America naturally.
Yeah. I mean, so I guess if we're all honest, there's kind of a weather issue too, right?
Yeah.
I mean, like, a little
Fuck
bit.
yeah.
But like, what makes you, you're a person in your 20s, okay? What makes you feel, and I think we all know the obvious answers, but just from you personally, like what makes you feel that this is just too hard?
The market, it's just so disappointing. Like, my generation is highly educated in comparison to like past generations, and yet we're struggling. It's like my parents raised me like, educate yourself and you'll make good money and you'll be able to live good. And I'm just like, okay, great. Now I'm here and I'm making good money, but like, I'm not, as great as they said it would be because of the market. I can't afford a mortgage with just me and my partner. We would need, more. We would need a friendly down payment from my parents. We would need so much help that my parents didn't need to have when they came here, in the early 80s. Like, my parents figured it out because they could afford to figure it out. My parents are not as educated, but yet they figured it out. I'm first generation, they're immigrants. They struggled, but they made it.
Because it was attainable.
Because it was attainable, exactly. My parents were learning English at the age of 30.
Jesus.
Like, in comparison to somebody who was born and raised here, I should have more opportunity, but I don't, just because of how unattainable and how messed up the market is, really.
So, sometimes when we talk about stuff like this, we get responses from social media of things like, well, everybody had a hard time.
Yeah.
But that's not really true. Not this hard a time, because, at the end of the day, today, even though house prices are falling in some regions, and we'll get to that later, it's still like an 8 times income multiple, which it wasn't. Even when your parents came here, it wasn't. It was like a 2.5, 3 times income multiple.
Yeah.
So it was attainable, right?
Exactly.
And this, I guess what happens is it just really starts to grind you down. I guess the high rents also start to grind you down.
That
right?
too. Like, if you're paying $2,500 a month in rent, and then food, groceries, car, this, that, how much are you realistically saving for a down payment?
How could you save? Right.
How can you
Even
save?
a decent income.
And
How
then
can you
emergencies happen, like, knock on wood, but things happen in life where, oh shit, now I have to spend $2,000 because my dog got sick. And then it's like, okay, there goes, a couple months of savings. And then it's just a cycle. It's a domino effect, right?
Absolutely. But, this is, and this was the reaction to the post. I mean, the strange reaction to the post was like so many people talking about, my kids have left. Yeah, my kids have left. Yeah, they're planning on leaving. Yeah, as soon as, even middle-aged people and older people saying, look, as soon as my, sad to say it, but after I have to no longer have to look after my parents, I want to leave. Like, I want to leave. Okay, because this place is too hard.
Yeah.
Too economically, too fiscally, too expensive. It's too expensive to handle. Now, I know that, there's the contradictory argument that there's like 400,000 people showed up in 3 months. Okay. And I don't think that's going to end. And I think there's meaningful reasons for that, because people from Indonesia would say, no, this is still a great place. I mean, we'll figure it out. But and all kinds of other countries. Like there is a chance to do well here.
Yeah.
But is that people looking at what happened to a generation ago? Like, is that people reflecting on people who left India or left other countries and even Africa? We've got lots of people from Africa in Canada. And when they came here 20 years ago, was the success that generation had giving the people who are coming today, the young people who are coming from those countries today, possibly giving them the wrong idea about how possible it is to succeed.
1,000%. 1,000%. Because even like at home, I have this argument with my dad where he's like, you guys can do it on your own. And I'm like, no, Dad, we can't. Like realistically,
the math doesn't work.
The math is not mathing.
Yeah. The math doesn't work. Yeah.
It's just not the same. And a lot of people from older generations refuse to believe that. A lot of people will say, oh, well, your generation is just lazy. You guys don't want to work. No, we are working. We are busting our ass, and
the math doesn't work.
It just doesn't work.
So to that point, let's talk about. I got interested in this after hearing from this young woman who was. She wasn't like bitter and angry about it, but she was just saying like I don't know what I could possibly do.
She's realistic about it.
And yet she's still working. Like she said, got a good job, working hard to get make progress in it. So. I started to look at a few numbers, and here's one that jumped out at me. I looked at, like, in theory, like a condominium is our version of a starter home. It's today's version of a starter home from like 25 years ago. So in Ontario, in 2014, so we'll go back 10 years, okay? 2014, the average price of a one-bedroom condo was $280,000, okay? If that was because incomes were less. I mean, incomes were less 10 years ago, although not. But you want to hear the knockout number is today, average price of a one-bedroom condo in Toronto is $720,000.
It's ridiculous.
So what the holy shit?
And the wages haven't gone up as much from 2014 till today.
Not a chance. Not a chance. Now, we are actually starting to experience this odd thing. Is it odd or is it just natural? We're experiencing this incredible moment in condos in Toronto where they can't sell any pre-sale condos. Like, how you have to sell a new construction condo in advance and wait for it to be built?
Yeah.
It's dead. Like, they're opening up the sales offices and saying, like a one bedroom, going to be $780. Sounds like a good, what? Nobody's here. Like, there's nobody's showing up. Okay. Studio, 610, 588. Nobody's here. We can't get started. We can't even get started because it's just a no. It's just now. What may have happened is that bad policies, bad government leadership. We got John Tory increased development fees in Toronto in 2021, 49%. Okay. Now that just flows through. The lie is that it's the developer paying it. The developer never pays it. The buyer pays it.
It's just robbery.
Just robbery. Okay. So, but it's their desperation to bring in more revenue because guess what? The public service keeps on growing. Like there's more public servants, more people in government every day than there is in private enterprise or in big or small companies or entrepreneurial. So we just keep growing government. Probably substantially more than we're growing the population. I'm not going to argue those exact numbers, but God knows it grows. But here's the problem. Development fees are 30% of new construction now. Development taxes, levies, all this stuff, studies, red tape. And so now have the prices met the point where we're fucked? Okay. It's just like nobody's going to be able to handle this.
No.
Oh, and by the way, investors, if you look at 2021, when in Ontario and British Columbia, which by the way is half the population of Canada is Ontario and British Columbia. You put those two places together, that's it.
Yeah.
So I'm not, but I think it's actually a little bit, almost the majority of the people in Canada. Okay. So in 2021, in those two provinces, over 40% of all buyers were investors.
Wow.
Okay, so they're planning on renting it out, or something, or flipping it, or some damn thing. Okay,
Yeah.
Because they definitely weren't. It's 45% weren't living there.
Of course,
okay? They're not living in it. Okay, that's not their home. They have another home. Okay, So those people have gone away because the math doesn't work. Okay. I mean, they see these interest rates have killed it, of course. And some of those investors took variable rate mortgages. So some of them are getting killed.
Yeah.
And the renewals come and the condo fees go up. And now we're going to see in British Columbia and Ontario, we're going to see some increase in property taxes. And Jesus.
We scared them away.
Well, maybe that the final phase of the government trying to gouge more development money out of everybody constantly, all the municipalities raising this and the province saying, yeah, okay. I mean, let's face it. When I bought a house years ago, decades ago, there was no goddamn land transfer tax.
Wow.
So like, what government just kept inventing shit to grab money on the backs of homeowners and home purchasers. Okay. So like, there's a breaking point.
When is enough enough?
Exactly.
And I think we're finally seeing that enough is enough.
I'm telling you, we're seeing it because there's no investors buying shit. Okay. Because the math doesn't work.
Yeah.
So places are going untaken.
Yeah.
And hey, guess what? We keep telling everybody we're going to build extra homes. We're going to build extra homes to make up for the supply problem. And we're going to actually, you can't sell any. If you try to start a 300 unit condo and you offer it for pre-sale and it only gets to 12% on pre-sale, you can't build it.
No.
Okay. You can't do anything with it. All right. You got to get to 75% pre-sale. Okay. We're having that right now. Yeah. Right across the GTA. Now, some people say, oh, well, when the interest rates come down, and they will come down. Yes, they will come down.
Yeah.
By the summertime, we're going to see significantly lower rates. But will it really fix it? Because we've got all this tax, development fees, levies. We've got higher construction costs, even though some of the concrete pricing has come down. Lots of other stuff has stayed up. So we got higher construction costs. We're going to have labor shortages because skilled trades, we're not replacing them fast enough. So is it an intrinsic problem that's maybe not going to go away? Hey, I don't know, but I know this. 2014, one bedroom condo. You always laugh when you think about it. 280,000. 10 years later, 720.
That's so ridiculous.
That's not even sensible. If I tried to tell this to somebody in the States, like you say in Houston or Chicago, or say, what do you think about that? Well, first of all, the guy in Houston would say, first of all, the 280 seems a bit high. 280 10 years ago sounds a bit high. I think it should have been like 149. Okay. My God. I mean, we've been sucked into a vortex here.
Yeah.
Right? Which is another kind of fascinating thing is that when you take investors out of the equation, will that just force rents up even a little bit more for the people who still have rentals? I mean, it's ugly. It's really ugly all the way around.
Just always a domino effect.
Yeah. Hey, we got the mailbag. So we got some questions from the people who write into the show and ask questions. So I'm gonna hit on some of them now.
All right, let's start with this one. I want to put more money down at renewal, but my bank says only 10% more. Is that right? Okay,
well, that's a great question, and it comes up actually a number of times. So here's the thing. At the point of renewal, in theory, your mortgages come open. But some banks, sometimes we're just dealing with people in banks who are not mortgage experts, right? So they'll say, well, no, our policy is 10%, but not really. Okay, so it circles back to the idea of shopping around again. Here's the truth. If you decide to go to another bank at renewal, which you can do easily, shop around, find a better rate, switch to the other bank just says, we're transferring a balance. So if you pay more than 10%, 25%, 18%, 22%, whatever it is, whatever you want to put more against that mortgage, you got cash to put against that mortgage, then that's the new balance.
Yeah.
And the bank who's going to accept the transfer just says, well, that's the balance. We don't care.
Yeah.
And that's it.
Yeah.
So the right answer to that question is you may have people in your bank really should be smart enough to say at renewal, you should put down as much as you want. Okay. But if you get wrapped up in the bureaucratic problem at the bank, well, it might not be a bad idea to shop anyway and switch because the company that you're switching it to, they don't care. You could have put 50% more against your mortgage. They don't care. They're just moving the balance. That's all.
Yeah. It's all about knowing your options, right?
Yep.
Okay. My bank calls me 1 year before my renewal saying I should blend and extend. What's that about?
Well, that's the idea that your renewal's far away, so you can't go to anybody else without paying a penalty, and you don't want to pay a penalty. And I would say just for literally 99.9% of everybody who's got a mortgage payment today, it's lower because it's a better rate than is on offer today. All right. But I think I've heard this about your banks coming to you and saying, okay, today the rate's 6.8 if you were to be renewing today. If you want to blend and extend, we'll renew you early and we'll only go 6.1. Now, the average guy says, wait a second, I'm only paying 3.69 right now. I said, yeah, but you don't want to pay that really high rate. You don't want to pay 6.8. You want to pay 6.1 and we can get that for you now. Well, that's a fuckathon. Okay. That's nonsense. Okay. Yeah. Everybody should know, hey, Canada, like whatever your wild theories are for a tiny few of you who think that everything's going to go to ratchet again, I'm here to tell you rates are coming down. So anybody who gets an offer, early renewal offer, don't fucking take it, okay? Rates are coming down. And this blend and extend thing, trickery, okay? That's all it is. It's just trickery. Because if you've got a great rate today, 3.6,
hang on to it.
Hang on to it till the bitter end. Shop around. And a year from now, the rates will be lower.
Yeah. Okay. Is it really time to look at variable again? My friends got killed on it, but my mortgage broker says it's best.
Okay. That's a big point of controversy right now because, people did get absolutely, completely destroyed on variable. Like you took out a variable for 1.45, that went all the way up to 6.2. You figure it was the worst decision of your life. Yeah. Okay. But here's what we know. Rates will come down sometime this summer. There's people who think it'll be April, but I'm more thinking of this summer. We know that the Bank of Canada rates will start to fall, whether it's summer or they'll start cutting in the fall. I mean, we just know there's going to be some cuts this year. And the estimates from economists are it'll be somewhere between 1.5% cut over the course of maybe another year. So if it starts in, say, July, then by the next July, it'll be down either... The estimates are between 1.5%, and I've seen as high as it'll be down 2.75%. But if we just took the average, we know it's going to be more than 2%. So if you take out a variable today at 6.2, you're going to be down to 4.2. So is it better? Maybe. You could also take a 1 year fixed. Okay, so there are options. But the idea of taking a variable while it was still on the process of going up, we know it's not going up anymore. Yeah. Okay, so if we know it's a process that it may be reasonable. Here's the thing, though. This is what I tell everybody, and I'm going to keep telling everybody. The reason that variable says variable is because the bank is not on the risk. You're on the risk. So if you're taking a rate that can change, then that's what it can do. Yeah. Okay. So I think the chances of rates going up again are next to none, but they still exist. Okay. So if you're somebody who looks at balance of probabilities, you say, nope, maybe take it. But if you're really risk adverse, no matter what, if you take a variable, you're on the risk. Always. The bank isn't.
Always,
okay?
Yeah.
That's the way it works.
Yeah.
Okay, so I got this question like 100 times, and it wasn't like it just happened so much. It's really not in the mailbag, but I want to address this idea of why in Canada don't we have 25 and 30 year terms? Okay, like in the States, you read today about in the States, there's they have kind of a sales deficit. Like some prices are actually going up in the States because nobody who got, let me simplify. In 2021, people in the States just booked into 2.89 rates, rates that were less than 3%. And the thing about the States is there's no penalty on a mortgage. So you don't have to worry about the math. You just have to find the best rate. So basically when rates go down in the States, millions and millions and millions of homeowners switch. Okay. They just say, well, I'm paying 4% now. Let me have 3. I'll take it. All right. there's a few fees involved, but it's not like the big penalties we have in Canada. Nothing like it, okay? And the term you take is either 25-year term, so your interest rate is guaranteed for the whole term, 25 or 30 years, okay? So if you're sitting on a 30-year mortgage or 25-year mortgage at 2.89%, and the rate today is 7.29%, you don't sell your house.
Yeah, I actually have a cousin who's doing that. They're going to move from Missouri to Ohio, and they have a 2.85 for like 30 years in their house in Missouri. And they're like, yeah, we're just going to keep it because it's like basically free money. And I'm like, oh, must be nice.
Yeah, but when they get the new house, the mortgage will be high.
Of course,
It'll be much higher. Yeah. But you can see how that would push sales down.
Exactly,
right?
yeah.
I don't want to give this up, so I just got to keep living here. And that in some ways has pushed some of the prices up in the States as well. So why don't we have that here in Canada? Like, why don't we have a system by which, why can't we offer a 25-year mortgage? Same rate. Here's a rate. The rate's the same for 25 years. Rate's the same for 30 years. Because we really don't. Okay. I mean, I think we don't. We just don't. All right. So why not? Let me give you a couple of examples, a couple of reasons behind it. So have you ever seen us sell a 10-year term?
No.
Nope. So here's the truth. Canadians don't even want a 10-year term, let alone a 25-year term. I know it sounds great in theory. Yeah. But it's always more expensive. Like, give an example today. Let's say the best rate you can get on a 5-year fixed is 4.99. Let's just imagine 5% is the best deal you can get. The same rate for a 10-year term is, let's say it's 6.2. That's not a huge difference, right? But it's the difference, okay? You can't sell a 6.2 versus a 5%. You just can't, okay? Like, people just won't take it. They say, no, give me the better deal. Give me the lower rate.
Of course.
That's the reason why when variable, one of the reasons, there's a couple of others, but one of the reasons why when variable was 1.45, there was a time when the fixed was only 2.1 and everybody took variable. Like, would just give me the lowest rate.
Yeah.
So there's a good reason. Everybody wonders why we don't have a 20 or 30-year mortgage in Canada. People don't even take the 10. They don't even take the fucking 10. Okay?
Yeah, exactly.
So if you don't take the 10, why would a bank say, well, they're not taking any 10s. Why would we offer 25?
Yeah.
People will buy it. Well, we don't think so.
Yeah.
Okay. So the other reason is securitization. So securitization is the process behind how you get a mortgage and you're paying the interest. You're paying that mortgage payment, but there's somebody on the other side of that transaction. Like, the bank's not just a huge company with a big box of money in the basement, right? I mean, like, somebody else has got to give them the money for your mortgage, and they're going to work on the difference. We call it the spread. So they don't have a lot of takers in Canada for a 20-year bond or a 10-year. Like, in the States, mortgages are priced off, even though it's a 30-year mortgage, it's priced off a 10-year bond. Because usually by the end of 10 years, most of those mortgages, people have sold their houses, things have happened, the mortgage is gone. But we just don't have a market for it here. Right. So, to have an efficient, effective, well-priced securitization market, you need to have a lot of activity. You need people who want to buy it. There needs to be a lot of 30-year action, 25-year action. So there isn't any 10-year action in Canada. So if there's no 10, there's no 30, there's no 25. And I know, so just let's put it to rest once and for all. People might think that a 25 and 30-year mortgage is a great idea, that you don't have any change in interest for 30 years. But in Canada, maybe it has something to do with why the prices are so fucking high.
Yeah.
Okay, maybe that's got a little action on it there. There's no market for it.
Yeah.
There's just no market. I mean, people have to want to take something. And when push comes to shove, if you showed somebody a 25-year loan, 25-year mortgage loan in Canada, and say, yeah, it's 6.9, 7.1, and you could have a 5-year for 5%, 4.99. There's no takers for the 30-year loan.
Of course.
Just none. It's too big a difference. So, and it also doesn't help that we got a stress test in Canada. So we got 2% stress test, so that 5% 5-year is a 7% stress test to qualify for a mortgage, and the 6.2% is 8.2% to qualify for the mortgage, and that just further pushes it down. Right?
Exactly.
So that's the reason, and I firmly believe we are never going to see, never going to see
Yeah.
25 and 30 year more. Never's a long time, but here's the good part for me. I'm 66, so never is not that far away from me.
Oh my God.
Okay?
Oh my God.
It ain't that far away from me. So the other thing that we're discovering has been this is what we've discovered in the last 2 weeks. Not much activity, but we've had, because it's Christmas, and it's people taking the time off. But after New Year's, they take another week because their kids are in school.
Everyone's on vacay.
Yeah.
Ron hates vacay.
Yeah. In general, I hate vacay. That's right. I mean, I like, you haven't seen me go on vacation, have you?
No.
No, I don't go on much.
You were
vacation.
even here for Christmas. I was like, what are you doing?
Yeah, well, it's there's a story behind that, but I mean, it's anyway. I'm not a huge vacation person, actually. Maybe I should be, but I'm not.
Should be.
By the way, there was a great. I'm gonna. This got a contradictory idea, but there was a great line once, about working hard. So I remember this great quote. There was a famous senator in the United States who got sick. He was a famous man. I won't bother because it's 20 years ago, so nobody knows his name. But a famous man who they asked him when he got sick, and it was a terminal illness. Okay. So when he's doing some interviews, he says one of the things he said was, "Hey, this is what I want you to understand for sure. When you're faced with a terminal illness, you get to do some thinking, and I realize this. Nobody ever felt that they should have spent more time at their work."
Thank you.
Everybody says the same thing. We should have spent more time with my family. All right, but here's the deal. I'm not sure he was right. I'm not sure he was right, because for some of us, what we do to make money becomes our vocation. And it's like, I can tell you what, I asked my doctor, my physician, family doctor, he's in his 60s now. I said, "When do you think you're going to retire?" And he says, "You know what? I like what I do. I know I'm needed. Patients need me," because there's a shortage of family doctors
huge shortage,
in Canada.
yeah.
Huge shortage. He says, "I know my patients need me." He says, "I don't work that hard." He says, "I'm not working like flat out like I did when I was young." Because he was doing emergency work on the weekends at the hospital. He was doing a lot when he was younger.
Yeah.
He says, "But he says, I'm still interested." He says, "I think I have something to I think I can help my patients. I pretty much like my patients.
Yeah.
So I'm going to hang in till I don't think I'm smart enough to keep up with it anymore." Okay.
Yeah.
So yeah, some of us don't regret investing in time in our work. Okay.
Yeah.
And
You shouldn't.
but some do. Some do. Like all you people who took the whole week off when your kids were off. God damn it. Okay.
I think there's a good balance. Like, travel and vacation now, so then when I'm older and I'm not, I don't want to retire at 65 either. I want to keep working. I feel like it'll keep me young,
Yeah. Unless sometimes, yeah. By the way, it does. I was going to say it. It
of
does.
Course, of
it
course.
keeps you sharper. It keeps you more interested in what's going on every day. Yes, 100% it does. So I'm not going to fight that.
I'm not just going to lay at home and rot.
Now, it brings me to thinking about, so I've been thinking about this stuff too. When we talked about the condo price change, the difference in condos over 10 years, here is something I think that we're discovering, because in the last sort of those weeks, we've seen this happen. There's not much activity, so we only saw it happen a few times. But I am starting to believe in the outer reaches of Toronto, the 905, like in the far limits of the 905, and it's not happening so much in central Toronto right now. I'm also suspecting that it's going on in the farther reaches of the Fraser Valley in British Columbia. We are seeing some significant price value drops
I read
from
about that.
2021.
Yeah.
Okay. Like we're talking to people. Like we had just this morning. Client contacts us, says, "Okay, I bought in. I bought in 2020, and I bought in the far distant reaches of Brampton, which is a suburb of Toronto, and I paid 2.5 then. I think it's worth. We did some improvements. I think it's about worth 2.7. So we have access to all kinds of electronic analysis. Like you don't have to send an appraiser all the time. So we have access to these tools that do digital analysis based on sales that have happened in the area. They basically got an idea of what the size of the property is, hopefully a similar property, similar area, recent sales, and they the computer spits out. I don't want to call it AI because I don't think it's that fucking smart, but it spits out an estimate of what the value is.
Yeah.
So this gentleman has to do some refinancing. He's got some issues. So we looked at the number. He's thinking 2.6, 2.7. And we looked at the number that the electronic systems spit out. Like, there's a couple of them. There's Purview and Opta. Anyway, 1.9 million.
Oh, no.
It's less than what he paid.
Oh, shit.
Oh, yeah. That's a holy shit moment. Okay.
Oh, my God.
I got it. And we just literally in the afternoon, similar thing. This is in Mississauga. Estimate of value almost identical, 2.8 to 3. We pull off the electronic analysis. Oh, this is somebody who bought the house a long time ago, like 22 years ago. Okay. 2 million only? Like,
damn.
It's like 30% less than what the people are thinking it's worth.
Yeah.
Okay. So here's where we think the issues are, because we're starting to really try to analyze this.
Right.
We think that the problems are with the stuff that's over 2 million. We think that the people who bought or thought their value was over 2 million in the farthest reaches of the Fraser Valley, in the 905 surrounding Toronto, where there was a huge run up in values in 2021. We think those places that are thought to be worth 2 million, well over 2 million, are in the most impacted price wise. And it looks like it might be big.
Yeah.
And it also is probably something that a reduction in rates is not going to solve tomorrow.
Oh, man.
Yeah, it's a developing story. We're going to talk about it on the pod some more. We're going to look at it as we go along.
Get more data.
But it ain't looking positive right now, I'll tell you, for those folks in the 905 that are over, that think it's worth more than 2 million. Because let's face it, under 1 million, lots of people can more reasonable. There's more people who can afford it, right? Once you get over 2 million, that's a small group that
Very
can afford
small.
that.
Yeah.
We're looking at some issues there. All right, so we've come to our favorite part of the program.
What the actual fuck?
Yeah, and this is like one that's made me so fucking mad in the last couple of weeks that I'm seeing this advertising. And this is the goddamn CEBA loan shit. Now, I gotta explain that. I gotta explain the CEBA loan stuff.
Yeah.
Okay, so in COVID, the government ran out a program of a interest-free loan for small businesses. And by the way, you could be, as long as you had a small business license, you could get it. They asked no fucking questions at all. If you had a small business license, here's the money. Okay?
So just like CERB, here you go.
Here you go.
We'll deal with it later.
Yeah, and some people got their asses handed to them on CERB, but this is CEBA. So small business loan, and the way it went was in the end, it started at 40, you could end up with 60. Okay. By the way, some people have multiple companies, right? Like they own multiple companies. We ourselves took 120 grand worth of it. Okay. And we just paid it all off. You know why we paid it all off right away? Because if you paid it all off, I hate to hesitate to say we didn't need it, but we probably didn't need it. Nah, fuck no, we didn't need it. But the idea was that if you took 60 and paid it off, you kept 20 for free. It was just a giveaway.
Oh, okay. Wow.
It's a grant.
Yeah.
It's a grant.
Okay.
Now, I don't want to relitigate the whole thing about whether the government lost their fucking mind during CERB, or during COVID, with CERB and CEBA and SUS and all the rest of it. I'm not going to debate that. It was a fucking emergency. I don't want to be trying to do diagnosis on the battlefield. Like you just got to do the best you can in an emergency. But holy shit, like it's basically they handed us $40,000 for a Suite FA because we paid the loan off in like 6 months. Okay. But a lot of people didn't.
Right.
A bunch of people took at least one CEBA loan. And just like what happens for anybody else with a time related thing. Time's up, fucker. Okay. So time is up now. It's fucking up. Okay.
Yeah.
And Woo! We got all kinds of people who need to repay this $40,000 or $60,000, small businesses, and they can't. Okay, I was talking to my friend Scott Terrio in the insolvency practice. He's saying, yeah, we're seeing a lot of that. Like, they can't pay. Now, what's happening is he also has to tell them, look, you can go other directions. Like, it was an interest-free loan, so it's not interest-free anymore, okay? You start making payments, but the interest is like 10%.
Oh.
So then, or you think you might want to pay it off. So, all right, so let me cut to the chase. This is what I'm so fucking mad about. This is what the actual fuck's going on here is finance companies and mortgage brokers. Yes, you mortgage brokers out there, you know who the fuck you are, okay? Saying that they're going to solve the CEBA loan problem. I mean, the finance companies just say, we're going to give you some money at 19%. I mean, holy fuck. Because sometimes the banks will say, ooh, you don't really make any money anymore. You don't even own a business anymore. So maybe not sure if we can continue this.
Yeah.
So people are saying, I want a bank. There's like a limited amount of time that if the bank who gave you the CEBA loan, there's like a kind of a strict payback program for them. Right. So people are saying, well, if we let's get it out of the CEBA program and get it into something where you could pay for a long time. Yeah. So that's like the finance companies. But now we come to my peeps, the mortgage brokers. Okay. We have seen ads. I've seen ads online from mortgage brokers saying, hey, I have the perfect solution. If you own a home, we can wrap this $60,000. We'll refinance your home and wrap it into the new mortgage or increase your mortgage. And therefore, you're going to be having a much, much lower payment.
Fucking vultures.
Okay? Like,
oh my God, they're swooping in.
Sweet fucking Jesus, folks.
Holy shit.
If you roll your CEBA loan into your mortgage, the interest rate, by the way, you might have a mortgage that's only at 3.5%. So you're going to break that mortgage and go to 5.5% or 6% just for the sake of the goddamn CEBA loan. Okay. But wait, there's more. Okay. ShamWow guy. There's more. Okay. Why the fuck do you want to pay this shitty loan for 30 fucking years? Okay. Like, that's the one thing they're not saying. The mortgage guy is saying to you, just take it. By the way, not all mortgage people. There's a lot of, every time I point at the evildoers in my industry, I got to remind everybody there's tons of good people, tons of very professional, honest, straight people in my mortgage business who would never dream of doing this. But if you're advertising the idea that, hey, we just wrap this whole $60,000 into your mortgage and your payments would only go up a tiny amount or even slightly. Well, that's also because they plan on taking your mortgage, which was a 20-year amortization, popping it up to 30-year amortization, even though like it's all just fuckery to make the payment smaller. Yeah. But it's 30 fucking years. Okay. Yeah. Like, holy shit. You want to be paying CEBA for 30 fucking years? Like, I don't care if the interest is less. Okay. When you start to figure out how much interest you're paying for 30 fucking years,
it's more, obviously.
Fucking huge. It's like I talked about the guy. It's like the fucking crooked mortgage brokers who want to drop a car loan into a mortgage. For fuck's sakes, the car's sold in 4 years, and you're paying for the car for 25, 30 fucking years.
So
it's
crooked.
Fucking nuts. Okay?
Oh my God.
Look, folks, listen to me. Please, Jesus. I can't stop these fucking mortgage brokers who are doing this. I saw the ad. It made me sick. Okay. I think it's more than one because I've seen others talking about it. So, folks, listen to me. I'm sorry that this CEBA crisis has happened to you. I'm sorry, but please think this through. Okay.
Don't do it.
30 years to pay off the fucking CEBA loan? Don't fucking do it. Okay. Like, try to find any solution other than that. And for you mortgage brokers who are pushing this, we got a special place in hell for you fuckers, okay? Honestly, we do.
Fucking
all right,
vultures.
Folks. Vultures! Fucking vultures! All right, we're out next week, folks.
Bye.
Have a good one.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.